What if I told you that the financial system as you know it is about to undergo a transformation so profound that those who aren't positioned correctly will watch their purchasing power evaporate, while a select group of Americans quietly preserve their wealth with a strategy that's been working for over 5,000 years? You're about to discover why 10 ounces of gold might be the only real exit plan you have, and why the window to act is closing faster than most people realize. Let me start by showing you something that's happening right now in the precious metals market that should have every American paying attention. While mainstream financial media keeps telling you that everything is fine, that the economy is recovering, that your retirement accounts are safe in traditional stocks and bonds, there's a parallel reality unfolding that tells a completely different story. And the people who understand this parallel reality are making moves that should concern you. Central banks around the world are accumulating gold at a pace we haven't seen in decades. Not just any central banks, but the ones that matter. China's central bank has been on a buying spree that's absolutely unprecedented. Month after month, they're adding to their reserves. The People's Bank of China isn't doing this because they think gold is a nice, shiny metal to look at. They're doing it because they understand something about the future of the global monetary system that most Americans haven't figured out yet. And it's not just China. Poland's central bank has been aggressively building their gold reserves. Singapore, India, Turkey, even countries you wouldn't expect are suddenly very interested in accumulating as much physical gold as they can get their hands on. These aren't random decisions made by bureaucrats who don't understand markets. These are calculated strategic moves by the people who have access to information that you and I don't see on the evening news. Now, before we go any further, I want to make sure you have access to something that could be incredibly valuable for your financial future. I've put together a comprehensive free guide that shows the saving secrets thousands of American retirees are using right now to protect their hard-earned wealth. It's in the description below. This isn't some generic financial advice you can find anywhere. This is specific, actionable information about what's working right now in this exact economic environment. Grab that guide while it's still available. Let me tell you about something that happened that most people completely missed. There was a moment not too long ago when the COMEX, which is the major commodities exchange where gold and silver futures are traded, had a situation that should have made headlines everywhere. The amount of paper gold being traded, the contracts representing gold that doesn't actually exist in physical form, reached a ratio compared to actual physical gold that was absolutely staggering. We're talking about claims on the same ounce of gold by multiple parties. It's like 10 people all holding tickets to the same seat on an airplane, and nobody realizes it until everyone tries to board at the same time. What happens when everyone tries to claim their seat? What happens when the people holding those paper contracts decide they want actual physical metal instead of just a promise on paper? That's the question that keeps precious metals analysts up at night, and it's the scenario that could trigger a price movement in gold and silver that makes everything we've seen before look like a minor fluctuation. Think about what happened in the housing market back in 2008. Everyone thought housing prices would go up forever. Everyone thought the system was solid. Everyone thought the experts had it all figured out. And then one day, people started asking questions. They started looking at what was actually backing all those mortgage-backed securities. They started wondering if the emperor had any clothes. And when they realized the answer was no, the entire system came crashing down in a matter of weeks. The precious metals market has a similar vulnerability, but it's even more dangerous because it involves the foundation of the entire monetary system. When you have a situation where the amount of paper claims on gold far exceeds the amount of physical gold available to deliver, you're sitting on a powder keg. And all it takes is one spark, one moment where confidence breaks, one major player who decides they want physical delivery instead of cash settlement, and the whole thing could unravel. Let me paint you a picture of what your 10 ounces of gold represents in this environment. It's not just about the metal itself. It's about what that metal means in a world where trust in paper currencies is eroding. Every major fiat currency in history has eventually failed. Not some of them. Not most of them, all of them. The Roman denarius, the German papier mark, the Zimbabwean dollar, the list goes on. And the US dollar, despite being the world's reserve currency, is not immune to the same forces that destroyed every other fiat currency that came before it. Right now, The U.S. government is running deficits that would have been unthinkable just a generation ago. The national debt has reached levels that mathematically cannot be paid back through normal economic growth and taxation. The only way out is through inflation, through devaluing the currency, through making each dollar worth less so that the debt becomes easier to service. This isn't conspiracy theory. This is basic mathematics. This is what every government in history has done when they've gotten themselves into this situation. And here's where it gets really interesting. The BRICS nations, that's Brazil, Russia, India, China, and South Africa, along with several other countries that have recently joined or are in the process of joining, are actively working on creating an alternative to the dollar-dominated global financial system. They're talking about a currency backed by commodities, including gold. They're setting up payment systems that bypass the dollar entirely. They're making bilateral trade agreements that don't involve U.S. currency at all. What does this mean for you? It means that the demand for dollars globally is going to decrease. And when demand for something decreases while the supply keeps increasing, which is exactly what's happening with all the money printing, the value goes down. It's not a matter of if, it's a matter of when and how fast. And when that happens, when the dollar loses its privileged position as the world's reserve currency, everything priced in dollars is going to adjust. Your savings, your retirement accounts, your purchasing power, everything. But gold doesn't care about any of that. Gold has been money for 5,000 years. Gold was money before the dollar existed, and it will be money long after the dollar is gone. When empires fall, when currencies collapse, when governments fail, gold remains. It's the ultimate form of wealth preservation because it's not dependent on any government's promise, any central bank's policy, or any politician's decision. Now let me tell you about the supply side of this equation, because this is where things get really compelling. Gold mining is not getting easier. It's getting harder. The easy gold has already been found and mined. The ore grades are declining, meaning miners have to process more and more rock to get the same amount of gold. The costs are going up. The environmental regulations are getting stricter. The political risks in mining jurisdictions are increasing. All of this means that the supply of new gold coming to market is constrained. And silver? Silver has an even more interesting story. Silver is used in industrial applications in ways that gold isn't. Every solar panel requires silver. Every electric vehicle requires significantly more silver than a traditional car. The green energy transition that governments around the world are pushing requires massive amounts of silver. But here's the problem. Most silver comes as a byproduct of mining other metals like copper and zinc. When those mines slow down or shut down, silver production drops. And unlike gold, silver gets consumed in industrial processes. It doesn't get recycled at the same rate. Once it's used in a solar panel or an electronic component, it's essentially gone from the market. So, you have increasing industrial demand for silver, constrained supply, and on top of that, you have investment demand from people who are waking up to the same realities we're discussing right now. It's a perfect storm for a price explosion, and the people who position themselves before that happens are going to be in a very different financial situation than those who wait. Let me share something with you that might change how you think about your retirement planning. If you're sitting on $100,000 or more in retirement accounts, there's a strategy that thousands of Americans are using right now that you need to know about. It's called a gold IRA, and it allows you to hold physical precious metals inside your retirement account without triggering any tax penalties. I've put together a detailed guide on exactly how this works, what the rules are, how to set it up properly, and why it might be one of the smartest moves you can make given what's happening in the economy right now. That guide is in the description below. It covers everything you need to know about getting physical gold into your retirement account the right way. This isn't about abandoning your retirement strategy. It's about diversifying it in a way that protects you from the monetary chaos that's coming. Worth checking out if you're serious about protecting what you've worked your whole life to build. Now back to why 10 ounces specifically matters. 10 ounces of gold represents a meaningful position. It's enough to make a real difference in your financial security, but it's also an achievable goal for many Americans who are serious about protecting their wealth. At current market levels, we're talking about a significant but not impossible investment for someone who's been saving and planning for retirement. But here's what most people don't understand about gold ownership. It's not about making a quick profit. It's not about timing the market perfectly. It's about having a portion of your wealth in something that maintains its purchasing power regardless of what happens to paper currencies. Think about it this way. An ounce of gold has always been able to buy roughly the same amount of goods and services throughout history. In ancient Rome, an ounce of gold could buy a fine toga, a belt, and a pair of sandals. Today, an ounce of gold can buy a nice suit, a belt, and a pair of shoes. The purchasing power has remained remarkably stable over thousands of years. Can you say the same thing about the dollar? About any paper currency? Of course not. The dollar has lost over 95% of its purchasing power since the Federal Reserve was created. What cost a dollar in 1913 costs over $30 today. That's not inflation. That's currency destruction, and it's accelerating. Let me tell you about what happened in the 1970s, because there are some eerie parallels to what's happening right now. Back then, you had high inflation, you had an energy crisis, you had geopolitical instability, you had a loss of confidence in government institutions, and you had a dollar that was losing value rapidly. Gold went from $35 an ounce to over $800 an ounce in less than a decade. People who owned gold during that period preserved their wealth. People who didn't saw their savings evaporate. But here's what's different now. The problems we're facing today are bigger. The debt levels are higher. The money printing is more extreme. The geopolitical tensions are more severe. And the number of people who understand what's happening and are trying to protect themselves is growing exponentially. When you combine all of these factors, you get a situation where the potential for gold to move higher is not just possible, it's probable. And let's talk about what happens in a real crisis. Not a theoretical crisis, not something you read about in history books, but a real, immediate crisis where the financial system seizes up. We got a taste of this during the banking crisis when several major banks failed in rapid succession. Do you remember the panic? Do you remember people lining up to withdraw their money? Do you remember the fear that spread through the financial system? Now imagine that happening on a larger scale. Imagine a scenario where multiple banks are in trouble simultaneously. Imagine a scenario where the government has to step in with bailouts that require printing trillions of dollars. Imagine a scenario where people lose faith in the banking system entirely. What happens to the value of gold in that environment? It doesn't just go up, it explodes. Because suddenly, everyone wants the one asset that doesn't depend on any institution's solvency. Your 10 ounces of gold in that scenario becomes your exit plan. It becomes your way out of a system that's failing. It becomes your bridge to whatever comes next. Because something will come next. There will be a new monetary system eventually. There always is. And the people who have real assets, tangible assets, assets that have been recognized as money for thousands of years, those are the people who will be able to participate in that new system from a position of strength. Let me address something that skeptics always bring up. They say gold doesn't pay interest. It doesn't pay dividends. It just sits there, and they're right. Gold doesn't pay interest. But you know what else doesn't pay interest? The cash that's sitting in your bank account losing value to inflation every single day. At least gold maintains its purchasing power. At least gold has a 5,000-year track record of being recognized as valuable. Can your bank say the same thing? Can your government say the same thing? And here's another thing the skeptics don't tell you. When you factor in the real rate of inflation, not the manipulated government numbers, but the actual increase in the cost of living that you experience every time you go to the grocery store, or fill up your gas tank, or pay your utility bills. Most traditional investments aren't actually making you money, they're just helping you lose money more slowly. Gold, on the other hand, has consistently maintained its purchasing power over long periods of time. That's not speculation. That's historical fact. Now let's talk about the mechanics of what's happening in the physical gold market right now. The premiums on physical gold coins and bars have been elevated for months. What does that tell you? It tells you that demand for physical metal is outstripping supply. It tells you that people want the real thing, not paper promises. It tells you that smart money is moving out of financial assets and into tangible assets. The U.S. Mint has had trouble keeping up with demand for gold and silver eagles. Dealers are reporting delays in getting inventory. Refineries are running at full capacity. This is not normal market behavior. This is what happens when people start to panic, when they start to realize that the system might not be as stable as they thought, when they start looking for safety in assets that can't be printed, can't be devalued, can't be manipulated by central banks. And speaking of central banks, let's talk about what they're not telling you. The Federal Reserve has been walking a tightrope for years now. They raise interest rates to fight inflation, but they can't raise them too high because the government can't afford to service the debt at higher rates. They lower interest rates to stimulate the economy, but that creates more inflation and devalues the currency. They're trapped. There's no good option. Every path leads to the same place: more money printing, more currency devaluation, more inflation. The only question is how fast it happens. Will it be a slow, grinding decline in purchasing power that takes years? Or will it be a sudden crisis that unfolds in weeks or months? Nobody knows for sure. But what we do know is that the people who are prepared, the people who have positioned themselves in real assets, the people who own physical gold and silver, those are the people who will weather the storm regardless of how it unfolds. Let me tell you about something that happened in Cyprus back in 2013. The banks got into trouble. The government needed a bailout. And do you know what they did? They confiscated money directly from people's bank accounts. Not from the rich, not from the corporations, from regular people who had their savings in the bank. They called it a bail-in. They said it was necessary to save the financial system. And overnight, people lost a significant portion of their savings. Could that happen here? Could that happen in America? Most people would say no. Most people would say that's impossible. But most people also thought it was impossible for the government to shut down the entire economy for months. Most people thought it was impossible for inflation to come roaring back after decades of relative stability. Most people thought it was impossible for major banks to fail in the modern era with all our regulations and safeguards, and yet all of those things happened. The point is not to scare you. The point is to wake you up to the reality that the financial system is more fragile than most people realize, and the protections that you think you have might not be as solid as you believe. Your 10 ounces of gold, on the other hand, can't be confiscated with the stroke of a pen, can't be devalued by a central bank decision, can't disappear in a banking crisis. It's yours. It's real. It's tangible. And it's been recognized as valuable for 5,000 years. Now, I want to talk about timing, because this is crucial. A lot of people think they can wait. They think they'll buy gold when things get really bad. They think they'll see the crisis coming and have time to act. But that's not how it works. By the time the crisis is obvious to everyone, it's too late. The premiums spike. The availability disappears. The dealers run out of inventory. The prices gap up overnight. You don't get to buy at today's prices when everyone else is panicking. The time to position yourself is before the crisis, not during it. The time to buy insurance is before your house catches fire, not while it's burning. And right now we're in that window where the smart money is positioning itself, where the people who understand what's coming are taking action, but the general public is still asleep. That window won't stay open forever. Think about the people who bought gold in the early 2000s when it was trading in the low hundreds per ounce. They were called crazy. They were told they were wasting their money. They were ridiculed by mainstream financial advisors. And then gold went on a decade-long bull run that took it over $1,900 an ounce. The people who bought early and held on didn't just preserve their wealth. They multiplied it. While everyone else was watching their retirement accounts get decimated in the financial crisis, gold owners were sleeping soundly. We're at a similar moment right now. The fundamentals for gold are stronger than they've ever been. The debt levels are higher. The money printing is more extreme. The geopolitical tensions are more severe. The loss of confidence in institutions is more widespread, and yet gold is still accessible. You can still buy it at prices that will look like a bargain in hindsight, but that window is closing. Let me share one more thing with you, and this is important. The guide I mentioned earlier, the one in the description, it's not just about gold IRAs. It's about understanding the full picture of what's happening in the economy and how to protect yourself. And for those of you who have watched this far who are serious about taking action, there's something else. If you're an American retiree with at least $100,000 in any retirement account, and you mention that you watched this video all the way through, You'll get access to an exclusive one-on-one educational web conference. No obligation, no pressure, just a detailed walkthrough of your options and how to implement a precious metals strategy that makes sense for your specific situation. This is only available to people who are serious, who have the resources to take meaningful action, and who understand that time is running out. Your 10 ounces of gold is not just a financial decision. It's a statement that you understand what's happening. It's a declaration that you're not going to be a victim of monetary policy. It's your exit plan from a system that's designed to transfer wealth from savers to debtors, from the prudent to the reckless, from you to the government. And in the times we're living in, having an exit plan isn't paranoid. It's prudent. It's responsible. It's what every person who wants to protect their family's financial future should be thinking about right now. The question isn't whether you should own gold. The question is whether you're going to act while you still can, or whether you're going to wait until everyone else figures it out and it's too late. 10 ounces of gold. Your exit plan. Your insurance policy. Your bridge to whatever comes next. The choice is yours, but the window to make that choice is closing faster than most people realize.